All right, all you devils out there, how's it going? Sam here with you Thursday the 14th. It's a little after 4 o'clock. Just kind of a wrap-up video here. There's such striking examples in the stock indexes here today. I thought I'd just do a quickie recap here. This won't be long. We're not doing any Elliott Wave. I just want to show you how pervasive this algorithm is and why you'll often hear me say the market doesn't matter. Now, well, members, of course, you know this, but for those of you that are on YouTube, if you're watching this, many of you only are coming looking for ideas and TA and analysis on crypto, but I just encourage you to consider other asset classes as well. You'll hear me say this all the time. The underlying asset, the chart doesn't matter. It doesn't matter what chart I'm looking at. They all trade the same way. Now, what we're just going to happen to focus in on the four major U.S. stock indexes today because it's such a striking example. So today, we've got bullish news in the background, good earnings, and some data here that suggests perhaps the inflation is not as bad, right? The Fed may not have to raise as soon, right? So it doesn't matter, right? It's whatever's driving, it's driving. But we go straight up, right? So now this low right here, this is about 10:45 in the morning, right? So we're over an hour into the day, and the news is out, right? So what you'll often find that is so typical because the market is manipulated. Every market is manipulated by the larger players because they can. They do it because they can, right? Members, you hear me say this all the time. You're like, how? I mean, should that be legal? Well, it is, right? So they're going to continue to do it as long as they can. Now, I don't want to digress into some of that discussion here. I just want to show you this, that regardless of what you think about, the markets are manipulated, if you know what you're looking for, that shouldn't be a problem here. Now, these are gigantic moves, right? So this for the average viewer here, this may not be something you're going to take a 3 or a 5 lot on the E-mini here, but you certainly have the opportunity to trade the micros here. So for those of you with accounts, even 20K and below, you can trade a 3, 4, 5, 6 lot in micros or more, and it gives you more flexibility for peeling off on the way. But I just want to encourage you to kind of keep your options open with regard to assets where you're trading, because as I've said, I don't know how many times, it doesn't matter. They all trade the same way. This algorithm is in every market, period. They never turn it off. So here, let me just give you a couple examples here before I'm only 2.5 minutes in here. I guess we're all right. So the market has been difficult trading, or certainly for short-term trading. This kind of thing here, very difficult. Right? So you can see in the size of these swings here, certainly at a 15-minute, you've got algos getting blown out on both sides. Right? I mean, that happens. When I show you these algorithms here, I'm never implying that they're always right. It's impossible because there's an algo on both sides, right? So there's always an algo on the other side. So whatever you're thinking, I got a bull move, well, you're going to run into the sell side. So one side has to break. Otherwise, we go sideways. Right? So, and that's always the case. So you can look here at these tops here and say, well, it looks like maybe there was something going on here. So could have been some TA in here. I'm just kind of eyeballing here from this secondary pivot. Looks like there was something here. But eventually, this even if we go to the dominant here, well, now we're at the 50, right? So you can understand what's happening here. Get it, the little front run here, but they're not getting to target, right? They can't get down here. So this starts to become a base that perhaps is implying that all it's going to take is a spark for the market to go. Well, today we got our spark. All right, so this dominant to dominant, right? This low to this low. Now, if you look here, if you don't know about this, all right, and you're a price action trader, it would be pretty easy for you to talk yourself into this thinking, oh man, I see what's going on there. Well, maybe I got a prior support here. It was support here. It was resistance here. Then they got through. They're testing. Okay, I know what's happening there. I know they're just testing the support there. Well, in a way, you could conclude that and you'd end up being right, but that's not what's happening there. Guys, I'm afraid to spoil the party for you. What's happening there? Golden zone. That's why. Now, if your deduction was, the price action here held it, well, you're actually right, but that's not what drives it, right? The price action, yeah, indeed. We're in prior structure, but what's holding it? software, right? Algorithms are sitting there right now. They're not going to, they're going to stay long until they get to that target or higher, right? There's higher targets here. So what do we have here? We have, of course, right? First thing I'm going to do, we've got a golden corner. Now, what's interesting about this, if I go to this pivot here, well, that's the lower pivot. So I think we will use this one here. That's the lower pivot. So it remains untagged. If we go here to the pivot from today, you've already got your 80%. But my guess is they'll get it here as well. So if I put that right, so now a couple observations. What do we get? Right, here's a, I'm simplifying. There's a 3, right? We're correcting. We get a 3. Oh, this is kind of ugly here. Oh, I shouldn't. I was trying to avoid any Elliott here, but just the basic premise here. I'm coming into a golden zone after going through the structure here of a 3. I'd be heads up here right now. So if you didn't catch it, this is the day before. You got another shot at it today, right? As long as this holds, 80%. Boom. Now my guess is that they're going to get this. I'm going to put this out here, right? Just because that looks like that. So even if we retrace a little bit, you could see perhaps some structure here, retrace a little bit. One more kick up. Be very surprised. They'll probably get that in the overnight. Right, so you're looking at that going, God damn, man, that's a, what's the, oh shit here. What's the size of that move here? Coming out of that golden zone up here, well, that's, that's almost 3% on a day trade. That's 118 ticks. I mean, this is a monster move. And this would be very hard. If you're sitting in a 1 or a 2 lot, unless you've got a very large account, it'd be very hard to go through all, because there's little gyrations in there. This pops here. You get up, now you're down here. That could have easily spooked you out. And then there was a little bit of a little battle up here. Members that are day trading with me know it was a bit of a battle here. And then they actually finally, there was a gap that they were closing. They did it all after 4 o'clock. Again, stuff that they can do because they can, right? There's no resistance after 4 o'clock. Everybody's out. It's just one algo fighting against the next, right? So they went up and filled the gap. Most of that last little push was all after 4 o'clock. Again, they do it because they can. All right, that's the S&P. Well, I know there's a gazillion more here, but I don't want this video to be too long. So let's go, let's go to how about we'll start at the Russell. All right, so same kind of thing all over the place, just up that same volatility here. Volatility's been very high, very difficult for day traders here. Then all of a sudden, out of nowhere, finally it shows up. Now here's that same pivot. Same thing, swing low, swing high. What do we do? Right into the golden zone, right? So here, a little pause at first target, gets second target. This one's so skinny, it hits it so fast, right? It's almost, that's why you prefer there to be a little bit more time passage with regards to the median lines here. But this, now, of course, note, it's not the 618. Right? This is what happens to new traders all the time. They've read somewhere in a book, oh, well, if it breaks the 618, I want to be on the other side. You cannot put your stop right under the 618. This will happen to you virtually every time in the golden zone. Right? So boom. All right. So we've got the S&P and the Russell today. You could probably figure out where I'm going. Let's do the NQ. Now the NQ, I went all the way out to the 60 here because you had, this has been, a little scary. A lot of volatility. I think we got this one here. All right, so this is, the sky is falling. Oh, no, maybe not. So they never turn it off. It's working on both sides. So swing, retrace, not the 618. Golden zone. So here we come down here. Here's the reaction at the first target. They get it, right? So nice, right? So this algo is getting paid here. Now I'm on the 60-minute. Well, okay, all well and good. Let's go down to the 15-minute. Now, same kind of thing here. There's been a lot of volatility here. This has been choppy, volatile, very difficult if you're trading on the, let's just call it 5 minutes and below. So you might be just looking at this going, okay, well, something in here looks like maybe that's, maybe this is prior resistance here that's now becoming support, right? I can see how it's been very easy to think that. It looks like that might have been something on the sell side, if I'm not mistaken. Oh, we got it here. Then we got to that target here. Looks like here we'd have it as well. Although if there's any market here that's prone to a very slight break, it's the NQ because it's so volatile. So it looks like you got a very, very slight 1-2 tick break here, but obviously they stayed with it. We go down here and look at the reaction at the target, right? So you got the volatility coming off of that, and of course then we get today. So this one here stays with it. So whenever I'm trading the NQ, I always use the 707 because you do see this pretty consistently. It'll be 1, 2, 3, 4 ticks beyond the golden zone. So you got to give that little buffer here. Same thing on the other side. All right, let's go to that low. Right? Golden zone. 1, 2, 3, 4 times. Oh, it's the price action. I know what it is, right? So, it's that resistance. Nope. That's not what it is. If you think that, you're going to get burned one of these days. You got to know what's actually happening there. Right? It's software that's holding that there. Right? That's why that happens. Oh, it looks like there's another one right there. But, again, these are big moves. So trading this in a micro is certainly with the Nasdaq that's so volatile. That might be a better way to approach this with the micros. Where again, you could trade, a 20 lot in micros here and then peel them off incrementally on the way up, or a 10 lot, whatever's appropriate for your account size. So we have a golden corner here that's unrealized here. Now, who wants to bet against that getting to that target? I would say that'd be a poor bet. All right, we know from here, not only do we have the golden zone, we have software that's going to stay long till it gets there, but you got your 80% odds from the median lines, right? So that's three golden corners, right, out of the stock indexes here, all coming out of the exact same location, all coming after a down move, after we had bullish news. Why do they do that, right? Because they can. So they want to spook retail. Oh, God, man, it should be bullish, and it's going down. Right to the 65. Oh, what did we not cover? The Dow. Here we get the Dow here. All right, so here's the Dow. Well, the Dow is interesting. I'll recreate this here. So the Dow, here we're back on the 15-minute, didn't quite make the golden zone. So when you see that, of course it's not always going to be to the tick, right? So we're in the pocket here of where you'd be anticipating along, and with the others going, that would have been something to be paying attention to. But usually when you see it come up short, there's a reason for it that's tied to this algorithm here. And it would appear to me that what has happened here is that this algorithm here, so if you see it, I know it's a little tricky to see here, but we go down here, we go right to the 50 here. We've got this structure right to this 50 here. And then we come down here, and that's a slight front run on that target. It looks like that may very well be what causes this to turn early. So we get some profit taking on one. And then, even if I zoom in here, it looks like you got another one to start it. Right, likely you did. So if I take that low, yeah, you did. Okay, so even if I just break it down here, swing low, here's the high. Let's get it right on it. Okay, now here's the drop. All right, so even though you didn't get it on the larger degree, now we come directly into the golden zone. Here's the result. Right to target. Boom. Right, you just have to know that they're there, or you're just trading blind. So we covered all four indexes, all the exact same pattern with one little exception here. We got it on the secondary. And this is a good example. Often you'll hear me say, hey guys, you don't have to wait. You don't have to be sitting down there in the golden zone waiting to buy that. Although, and there being another good example of why with micros you could take a little more risk there, because you're not going to get punched in the face if it blows through. But if you didn't catch the turn here, I thought I was going to the golden zone. I wanted to get that. Oh, wait. That's the one virtually every video I set that up for you, saying you don't have to pick the turn. You don't have to be the hero. Wait for the swing in the first retrace. Can it get any better than that? Is there any question in your mind as to what is happening there? Right? Look once it gets there. Pretty remarkable. You say, okay, well, that's all right. So you made a pretty good case there. It was probably, that's just stock indexes, right? Stock indexes. How about crude? Inventory today, right? One of the probably, along with the initial balance patterns here, those members that are day traders with me know that that's the easiest money on the board every day. And it's probably one of the best kept secrets. Amazing to me, people don't know it. I mean, some do, but if you want to learn that, you're going to have to come into our day trading room. Well, here's crude. Inventory report day because of the holiday, so they push it out a day. So here's the reaction to the inventory report. Now, crude, I think this has about a 98% probability factor. Crude the move, once the report hits, the market will move one direction. It's almost like 99 out of 100 days where an inventory report is released, the market will turn around and retrace in excess of whatever it did, the reaction from the report. It's almost all, somebody ought to do the stats on this. I'd be willing to bet you it's 98 out of 100 days. It will always retrace beyond whatever the first reaction is. Let it pause. It's going to take out that pivot. The degree of regularity there will blow your mind, right? Somebody ought to do that and report back. But you're saying, well, why do I care? What does this have to do with our algorithm? See that? So here's the reaction. See, this is, okay, well, I'll let you draw your own conclusions, right? This is whether or not this is fair play. I'm not making a statement. You tell me what you think. Okay, so we're going into the inventory report. Every crude trader on the planet knows it's coming, right? Here's where we release the report, right there. Oh, shit. That one didn't have the impact I wanted. All right, so here's where we release the report, right there. Where are we? Golden zone. Right, front run, likely. Right, looks to me like it's probably tied to something on this side. Right, so we don't quite make the golden zone there, but you can see how it's working. So we're certainly in the pocket, right? This is where you want to be looking for a buy. Swing. Right, it does it in a 3. It does it in a textbook measured move with a slight front run on the target. Now, what coming out of there? Here's the front run off the target. Here's the prior pivot high off the release of the report, 100% plus. All right, there you go. It's just a little bonus video here. Oh, God, I would think at this point, right, for any regular viewers, you know that this is what moves the market. As you've heard me say it, it's the DNA of the market, right? It's what causes the market to move. You can bicker with me and say, oh, no, it's the earnings, it's the cash flow from the companies. It's that may be why they're heading one direction, but once they start moving in that direction, this algorithm is what gets them there, right? Swing, retrace, both sides. Every time frame from the 1 minute to the 1 month asset doesn't matter. From crypto to FX to commodities to soybeans to crude to your stock indexes to your individual equities, to bonds, it doesn't matter. Same algorithm drives it all the time. Right, so that should be a little bonus for any of you that are new to this channel, which I'd probably be surprised, but maybe now we get some new ones. Heads up, right? You were just given a gift. Right. Otherwise, if you don't know where this is, you are trading blind to the market. You've heard me say that many times before. You're walking through you're walking through a minefield with your eyes closed. If you don't know where that is, right, you'll buy right into it. You'll sell right into it. Okay, guys, there you go. All right, we'll be back tomorrow with Bitcoin Friday and a few little nuggets in there as well. We know how responsive Bitcoin is to the golden zone. Okay, with that, we'll wrap it up and we'll talk to you guys tomorrow.